I'm looking at people going, why are they here? Why are they here?
Yeah, I'm hoping to catch up with Richard and Elaine when I'm down there too.
That's,
They're
I'm looking at people going,
on Fisher's Lane.
never heard
so,
anything from
you
them,
know,
so I
women
gave them the
from
time.
Fisher's
But
All right. Good evening, everyone. I'd like to call the Board of Selectmen's meeting for January 26, 2023 to order at 6:01 PM. Second order of business will be to approve the January 12th, 2023 Selectmen meeting minutes.
So moved.
Second.
All those in favor? All right. Okay, item 3, this would be the public forum. This is an opportunity for anyone who wishes to address the board this evening with anything that isn't currently on our agenda. Anybody in the audience? Anyone at home?
There are 5 participants and no hands raised.
Perfect. Okay, moving on. Consider the following renewal liquor license and special amusement permit submitted by the Kennebunkport Resort Collection. Now, since all of these have been signed off by the chief of police and fire, et cetera, and code, I'd like to take these as just one item, if that's all right with the board.
Sure.
Okay, so first up, we have Tides Beach LLC located at 930 Kings Highway. We have the Yachtsman Hospitality LLC at 57 Ocean Avenue, the Boathouse at Kennebunkport LLC at 21 Ocean Ave, Cape Arundel Inn LLC located at 208 Ocean Ave, Ivy One LLC DBA, the Clubhouse at Cape Arundel, Inn located at 8 Old Fort Avenue, Lodge on the Cove LLC at 29 South Main Street, the Kennebunkport Inn LLC at 1 Dock Square, and Hidden Pond LLC located at 354 Goose Rocks Road.
So moved.
Second.
All in favor?
Aye.
All right, licenses are renewed. Okay, number 5, this one here, I don't know. Consider the renewal liquor license and special amusement permit submitted by the Rumline Motor Lodge DBA Rumline Resort located at 41 Turbots Creek. I know you need
And
to
I am
recuse yourself.
accusing.
Yeah. Do I have a second?
Second. Oh, second.
Thank you.
Yes. All
Break
those,
and pause.
all those in favor? Okay, the motion passes 4-0 and 1 abstention or recusal. Okay, moving right along. Number 6, annual investment presentation by H.M. Payson.
And tonight we have with us Noah from H.M. Payson. Dan Lay wasn't able to join us tonight, but as you know, our funds are invested with H.M. Payson for both our Kittredge Trust as well as our Pickavit Trust. And as part of our investment policy, H.M. Payson comes on an annual basis to update you on where we have come in the past year, and we give feedback on what our payout to the 4 fire companies will be that year.
Great. Well, good evening. Nice to see you all in person. I think I saw you on Zoom
A few times.
a few times.
We're happy
yes.
to be off of that.
I
Thank
don't know
you.
if I had the beard then, but nice to see all of you. I've been told to keep my remarks brief, so I'll keep them brief, but if there's any questions you have, please feel free to interrupt me as I go along, and happy to make this as conversational as you'd like. Just to start on page 1, page 1 shows the asset allocation for the assets that we manage for you. It's, as of the end of last year, it's about $1.6 million. 72% of that was in equity. I think it's important just to talk from the beginning of what our approach, however, is to manage your portfolio. Our approach is to take at least 3 to 5 years of the liquidity that you would need and put it in relatively stable assets like cash and bonds. And as I think you're only drawing, what, 2% or a little bit over 2% at this point?
4%.
4%, okay. Well, 4%, if you think about 4% times 5, that's 20% of your portfolio. And you have more than that in cash and bonds. So the first point to make is you're well reserved for any volatility in the stock market, in our view. The equity at 72% is below your target equity, so we even have potential to take that higher over time. Page 2 is the...
I've got a question.
Yes,
I got
go
an
ahead.
easy question, though.
Sure.
Does the town of Kennebunkport have an investment strategy that we provide? For instance, percent of this, or how we want to
We have
go?
an investment policy that has parameters around these different markers, and then it gives them and the investment committee the ability to move within those.
And do we revise it often, or is it just
The investment policy, I would say, is fairly broad in terms of what percentage, most of it is going to be in the stock market, and then the rest in the fixed assets of bonds. But it doesn't, HM Payson really makes those decisions and then reports to us on a monthly basis.
But within our parameters, though?
Yes.
Okay, that's all I want to know.
Good. I saw you had taken, I think it was 38,000 last year. So by my calculations, that's not, you're actually taking out less than the 4% currently, unless I'm missing
Well,
something?
we're taking 4% only of Kittredge. I should have
Okay. All right.
specified.
So I-
We're not taking 4% of the pick of it. Pick of
Okay.
it, we only take when we need it.
Right. So when I look at your total assets, the total draw is much less than that total 4%, which
Yes.
means you're even more well-reserved for the volatility that we're seeing in the market right now. If we turn to page 2, this shows the performance. Obviously, it's never fun to live through down markets, so we've had quite a, as you know, a down market in the stock market and the bond market. The good news is that your portfolio has held up better than these markets, and that's what I'll show you on this page. There's a lot of numbers on this page. I'm not going to go through all of them. But the gray bars here show you the performance of the asset class in your portfolio. And underneath that, in the white area, it shows the benchmark that we use to measure our performance against. And I just want to, there's a number of time periods here. I just want to draw your attention to a couple lines. The first, where you have most of your assets, is corporate bonds and managed equities. Those are the stocks that we pick for you. On the corporate bond side, if you look at the fiscal year to date, you're up slightly versus down versus the benchmark. It's a positive 27 basis points versus a negative 24. And then on the managed equity side, up 2.69% versus 2.31. So that's your fiscal year to date. So actually, fiscal year to date, it's been positive in the stock market. And that's giving you a total return of 2.2% down there at the bottom versus 1.68 for your benchmark. Now, if you look back over 1 year, you can see a similar pattern. The bonds are down 3% versus 5.5% for the benchmark, and the stocks in your portfolio are down only 15.5%. So it's never fun to say your stocks are only down 15.5%, but the S&P was down 18% last year, and if you look at the total performance of your portfolio, it was down 12.3% versus down 14% for the benchmark. And then if you look at the longer term periods, 3 years, 5 years, and since inception, you can see a similar pattern where the equity outperformance has driven strong outperformance of the overall portfolio. Any questions on that? Okay, if we turn to page 3, this is a nice chart to look at. This shows you graphically what the value of the portfolios have done over time. That's the blue mountain that you see there. And then the yellow, excuse me, the maroon line is the net investment in or out of the account. So any money that you've taken out of the account or added is shown by that maroon line. So if you go back to 2015 when this account started, you can see you started with $1.1 million. You've taken out $236,000 since then. You've made more than triple that, even with this latest decline in the market. You more than tripled what you've taken out in terms of the net increase in the value of that account to get you to $1.6 million. And then if you go to the left, you can see fiscal year to date. You're just, again, there's a positive return. You can see an investment gain of about $30,000.
Do we invest money? Do we still put money into it, or do we?
We don't.
We don't?
Any questions on that?
Yeah.
Okay, I'll touch on a couple more slides here. I'm going to skip over page 4, which actually shows the different trusts. It just shows you what's come out of the different trusts over time. This is really sub-accounting on your behalf. We don't do much with this on our side. If you go to page 5.
Can you, just one
Yeah.
thing I want to just understand. I've never seen it before, so HMP-V ratio, just briefly, what
Sure.
is it?
Okay, so this is on page 5.
Because this shows us in great shape.
Yeah, so let's go to page 5. So when we're picking equities for you, we're looking for companies that have what we think are good characteristics. So think of a company that's got, makes very good margins on each sale that it makes, and those margins are sustainable into the future, and it's got an opportunity as well to grow its business. So we're looking to find those types of companies at cheap valuations. The V ratio is a way to look at a bunch of these different characteristics together. If you look at the top part of that V ratio, that's your return on invested capital, which I'll define for you in a minute there, plus the yield you're getting on your stock over the PE ratio. So let me break that down. The return on invested capital, an easy way to think about that is that's the cash a business is getting back each year relative to all the cash that's invested in its business, in its plant and equipment and so forth. So if you're getting a lot of cash back each year sustainably versus what you've invested, that's a good investment. So that's what you're getting, that's one component of what you're getting as a stock investor, plus the dividend yield.
Why is it minus, why is it earnings minus dividends? I thought it would be plus dividends.
It is plus dividends.
Yeah, it's plus.
I'm sorry, in the ROIC?
All right, right there.
Yeah, but what the ROIC itself, oh, you took the dividends out there because you added them in up top.
Exactly.
Got it.
Right. So the
See that?
the PE ratio is what we're paying per dollar of earnings of the companies that we're invested in. So an easy way to think about the V ratio is it's what you're getting versus what you're paying. So a higher ratio is better. And so it's just a rule of thumb or a handy reference that we look at where we can see the portfolio, we're getting more return in dividends cheaply versus the S&P 500. That 0.98 ratio versus a 0.59 for the S&P 500.
Gotcha.
You can see the actual return on invested capital is 12.6 for the portfolio versus 8 for the S&P 500. So again, we're investing in higher quality companies than the S&P 500. We think this helps protect you on the downside, and we think those companies have a good chance to outperform when market conditions are good on the upside as well. And we're finding those companies more cheaply. Last two pages I'll touch on. Page 6 shows the sector breakdown of the companies in the portfolio.
I have a question on that. There's not a lot in energy, but what
Right.
percentage of that is fossil and what percent is renewable?
That would be all, there really isn't much renewable energy to invest in the S&P 500, and certainly not companies that would have the characteristics that we like to invest in terms of strong balance sheets, high margins, and so forth. A lot of those companies are smaller and more speculative, quite honestly.
I'd like to consider not investing in fossil fuel. I just rubs me wrong. Why can't we move that? And there must be another area. Healthcare is booming, I understand. What would be the downside of moving that 5% out of energy?
Well, I think, first of all, your investment policy would need to be revisited. I think you'd want to make that decision collectively as to whether you want to have no fossil fuels. So I would leave that for you to discuss. That is something you certainly could consider if you wanted, but I think that's probably worth a discussion.
Oh, definitely worth a discussion. I was asking, what do you think the downside, how much impact do you think that would have, in your professional opinion?
It's hard to say. I mean, I think, look, different investors have different preferences, and we're happy to work with whatever you want. There's a big debate about this. If you are, it's hard to answer that question. Really, it really is. I can't tell you exactly what the percentages you might or might not have in the portfolio. To the extent that you have fewer categories to invest, in some sense it limits the areas that you can invest in. But you may have a preference and not want to see funds invested there, and we can work with that as well. So
Well, I have
there's no hard and fast answer to that.
I
really.
have no problem with investing in fossil fuels
Me
at
either.
this point. So,
Our job is
Again,
to
well-
grow the town's money. And if we start picking things that we don't want to invest in, then we're going to go down a real slippery slope.
You can go down
And that's
the list.
beyond tonight's discussion.
Indeed.
So,
Right.
We'll
That's-
have that discussion.
Yes.
offline.
Yeah.
Thank you so much.
Right. So just to give you some color on those energy investments, since the topic is, we invested in the energy space in a modest way in the beginning of the year because we wanted to protect the portfolio from inflation. And that actually turned out to be a good bet as far as the performance of the portfolio. So those equity holdings have done particularly well. We don't know if they're going to be long-term holdings in the portfolio, quite honestly, but they were beneficial to performance, certainly in the last year.
But again, in terms of the yield, I mean, they're middle of the road. They're not stellar compared to other things that I see there.
Yeah. But the yield is just one component of it.
You know?
So the bulk of this portfolio, as you can see, is in technology and healthcare, very significant weights already there. Those are areas that we've been invested in for some time. We still think that there's strong returns there going forward. And then if you look at the kinds of returns and margins you can get in the center of this page, those areas that are shaded green are the areas where the returns and margins in cash flows are higher than the index median. So generally, we are invested in the areas where you can get higher returns and margins. Okay, last page I'll touch on is the top 10 holdings in your portfolio. These are mostly household names, just to give you a flavor. Berkshire Hathaway is Warren Buffett's investment vehicle. We think that it's particularly cheap relative to the sum of the parts. He's invested in a lot of different businesses, a lot of them you can value publicly. Alphabet is Google, so I'm sure you're all familiar with that company. We think it's relatively cheap versus its growth rate. Microsoft, Broadcom is a company that produces 5G chips. So if you're buying a new phone that's 5G, Broadcom is a supplier into names such as Apple. Johnson & Johnson is a company you're familiar with. They're breaking themselves up. We think there's some value to be created there. CVS Health is turning itself into a one-stop shop for healthcare. It's very cheap. We think if it's able to do this in terms of providing health insurance and also being a walk-in clinic, that there's value to be created there. Visa is a name that we think has more upside as international people start traveling again. Apple, you're familiar with. Pfizer, no need to explain what they've done in terms of vaccines and so forth. And then Bristol Myers is another healthcare company. I would point you on this page to the 5-year dividend growth. You can see in the middle of the page there, 11.2% for the portfolio versus 5.4% for the S&P. So more than twice the rate of dividend growth versus the S&P. And also the earnings growth in the next column there is 22% versus 16% for the S&P. So the takeaway I'd want to give you from all of this is we're still investing, despite this downturn, in very high-quality companies. We haven't changed our stripe. We're not trying to chase the latest trend in the market. Your portfolio is very well positioned to withstand this volatility. Again, you have a very large reserve relative to what you're taking out of this portfolio. So this is exactly why we position portfolios this way, so that during these periods of weakness, you don't have to sell stocks. And in fact, you can use these periods to your benefit and in fact, perhaps increase the equity exposure. That being said, we're below your benchmark right now, so we're being very cautious and very deliberate. And we're spending a lot of time looking for ideas to add to the portfolio. But we're still a little bit cautious on what's going on in the overall environment, and we're taking it one step at a time. So with that, let me stop my comments, and I'd be happy to take any additional questions.
Have you, by any chance, taken a look, and how do you feel about a pending recession or a downturn, and a further downturn in the economy? The economy's pretty good right now, so.
Yeah, so the GDP came out today, right? 2.9%.
Yeah.
I'll tell you, basically, when we look at companies, we're not top down, so we're not looking at what the economy is going to do and then trying to figure out which sector is going to outperform and then pick companies in that sector. We're looking to find good companies. And it's very hard to predict what the economy is going to do or the market's going to do. There's a whole industry of people who regularly predict that and get that wrong. So we really focus on the companies. That being said, we are a little cautious because inflation, while it's been coming down, is still we haven't had to work through this type of inflation, as you know, in 40 plus years. And last time we had to do that, there were 2 recessions, and it took us 3 years to do that. So we're a little cautious. Another thing that's giving us pause is that the valuation on the market you saw here was 17 times. That's just kind of at the high end of average. And also, remember, valuation on the market is a valuation on earnings. And if you look at what happened last year, earnings actually grew in the S&P 500. So with all of the slamming on the brakes that the Federal Reserve has done and the slowdown in the economy, we're concerned about earnings slowing down. And so you put those together, we have a market that's not all that cheap, and there might be some pressure on earnings. It's not an environment where we're jumping up and down to add things to the portfolio. That said, it's a company-by-company decision, and we are finding things here and there, but we don't think it's a hugely attractive market yet.
Okay,
But thank you for that.
thanks.
Any other questions? Okay, thank you very much, Noah.
Thank you.
All right, moving on. Number 7, request for forgiveness of the attorney's fees from Brian and Denora Ellis at 43 School Street. Did you wish Warner to speak to this, or are you going to talk about it, Lori?
Sure, why doesn't Werner come up?
Good evening.
Good evening, Warner.
So,
Hello.
The timeline I put.
as you all know, you all have a request before you from the Ellises regarding forgiveness of town legal fees. Just as a reminder, this was the result of a notice of violation that I know the board is aware of related to an unpermitted shed, in which the Ellises chose not to come in and receive a building permit for that. Based on board direction, we proceeded with passing that along to town council, which then filed it in court, and as you all know, we received a positive judgment on that. We did return back to the court to request for a reimbursement of the town's legal fees associated with that, and were subsequently awarded that by the court. So what you now have in front of you is a request from the Ellises asking for relief from that amount.
And you tried to work really hard with these people, and they just didn't want to come in front.
Yeah, I didn't work directly with them. That was, Andrew Welch worked with them, directly, but there were multiple opportunities that were given to resolve the issue.
I believe they wrote us multiple letters, so they were clearly aware of what was going on.
Correct.
Yeah.
Do they have anything to say? Do we want to hear from?
David, are they in the audience?
No one in the audience has their hand raised.
Okay.
Is there anybody here representing?
No, I know them, they're not here this evening.
Okay.
I'd make, I went through everything, everybody's gone through everything. The court has spoken, we've gone that far, so I would make a recommendation that we deny the request.
Is that that's a motion?
A motion,
Do I have a second? All those in favor? So moved. Motion denied. Thank you, Warren. Okay, number 8, appoint Nathan Shore and Stephen Kagan to the Climate Action Plan Task Force with an expiration of October 2023. Do I have a motion?
So moved.
Second.
All those in favor? Congratulations
Thank
to
you,
Nathan
Nate.
and Stephen. Okay, and we're at that time of the year, we're going to discuss Goose Rock's beach parking permit fees for 2023. That's item 9.
I'd make a motion to keep the fees as they are.
Do I have a second?
I'll second that.
Second.
All in favor? Motion passes. Very good. Other business, number 10. Mike?
Number 10.
Do you have anything?
Oh, I do,
Other
yes,
business.
I do. I got a couple of things. First of all, I want to acknowledge the effort of the Highway Department, the Fire Department, the Police Department, and
CMP.
CMP, oh,
The
those
workers
guys,
anyways.
those men and women did a yeoman's job. Same with Spectrum. I mean, we were out of internet for, and those poor guys, no, but those poor guys, I was watching a couple of them over on Mills Road at the corner of Beechwood. I mean, out there, oh my God, it was cold, and the contract, along with CMP, the contract people, I mean, they did an excellent job. I mean, God, and you just drive around the other day after the storm and take a look at what they were dealing with trees falling on wires, and I mean, it was.
Storm in 98.
It was a mess. So that, I just wanted them to know that we really appreciate what they've done. The second thing is that I've had a call, actually, one discussion in person and a call, an elderly person asking me if it would be possible if they could move limbs to the road, if they could have the town people pick up the branches and the limbs if they piled them on the road. And she pointed out that most of the people that stay here year-round are elderly, and that a great deal of elderly, including my next-door neighbor. And they just can't, they don't have a way to get the branches to the town where we're dumping them. And one of them said that you got to line up to get a tree service to come in, and they want $150 for one branch. So, or one, I'm assuming that's a substantial branch, I don't know. But my next-door neighbor, one of her branches came down on one of her cable wire, and we saw her out there yesterday trying to tug at I mean, it was a big branch. You can't. So if there's, I was asked to ask if it's any possibility that the town might be able to assist some of these people, that's all.
I think that's something we'd have to ask Chris. I mean, certainly it sounds feasible, but I know they're busy. They have a lot going on.
Yeah, I know. I know we can't make a motion
Yes.
tonight to do it, but I just wonder if there's some way that we can consider it, like you're suggesting, talk to Chris.
Maybe you and
So-
Lori can talk to Chris?
Yeah, I'd talk to Chris. But,
I mean, I have a pickup truck too. We can take
Yeah.
a day and go around if you want to do that. But-
she suggested that, like the Boy Scouts when they pick up trees, but I said, but a lot of these got to be chainsawed and so forth, and there's a liability involved, and so I will just check with the town to see if there's any chance that we can do anything, that's all.
Maybe to have a opportunity for people to individually request if they have a special need. I don't know how we go about pricing, to have someone come around and pick them up, if we were to try to contract it. And I think it'd be a heck of a burden on the guys to try to do everybody that's gonna bring things to the curb. But if people have a need, then I would think we might wanna try to work to be able to address individuals' needs.
Have them call.
Yeah,
Yeah.
yeah. But, so I don't know how you set the criteria, but I think that might make a little more sense.
Alan, do you have anything?
None, thank you.
John, did you have anything else?
No.
Okay.
I
Sheila?
just wanted to ditto Mike and say thank you to all the people that got us out of the snow and ice.
Yeah.
Does that mean we didn't thank them?
We did thank you.
Oh, good.
Lori, do you have anything?
We put out notice yesterday, since the snow has now stopped for a moment. We have been out cleaning up the sides of the roads and making sure that the wood was out of the road. I know that the crew was out working again today on cleaning up snow and ice in areas, as well as starting to try and pick up storm damage that's impacting the roads, and that's our first priority, so that we don't cause an accident.
Sure.
And we also can plow and maintain the roads. We will have, so we did put out an email distribution as well as social media posts notifying people of who are contractors, basically the tree contractors in our area, as well as landscape contractors who could potentially come and pick up the wood. We will have on Friday, February 3rd, and Saturday, February 4th, at Public Works from 7 a.m. to 3 p.m., we will have an area where people can come drop wood. So if they can bring it to us, we'll then dispose of the wood for people. I'd like to start there, since we do have these other responsibilities as well. and then see where we are. I think what's challenging is that we can't go on people's property,
Yeah.
both by state law as well as for liability insurance reasons. Could we stay within the right-of-way and pick up wood? We could, but people would need to bring it to the right-of-way, and it is a massive job that would take weeks to do, to go clean up the wood everywhere. But I'd like to start with our Friday, Saturday, February 3rd and 4th, see how many people bring wood. I know that there are people who probably haven't even had a chance to visit their property yet because they live out of state, and see what that looks like. I did think about whether there was another organization in town who might want to kind of take on some of this job. I haven't heard from any yet, perhaps there is a service group out there who would like to work with us as well.
You know, the high school, at a school that I worked at, the high school sent a football team out, you know, as a community service thing, or the basketball team. And that might be something, you know, we could get going. I don't know.
I did have a question that someone had asked. You mentioned the 3rd and the 4th to bring wood to Public Works. Is that for individual residents only, or can our landscape community also, industry, do that? Is that, was that?
Assuming that they're bringing it from the storm for people in Kennebunkport, yes.
Okay, good to know.
Do you have anything else, Lori?
I don't.
No. And I don't really, other than just to pile on and say what a great job. I see some members of the fire department out here, and I saw them everywhere while I was out driving around, and spoke with them, and was very impressed with the job that they did to, you know, recognize them as our own, and how fortunate we as a town are to have such an organization that's all volunteer, and you know, there
Yeah.
especially when you need them, you know. But
For sure.
for sure. Okay, moving on. Approve the warrants.
So move,
Second,
All in favor? And
move to adjourn.
so move.
I need a second. You moved. You didn't second.
You double moved.
You moved second. I didn't hear you.
Good move. All right. All those in favor?
Oh, sorry.
We are done. Thank you, everyone.
Thank you.
The well-deserved